Hi guys, hello once again. My name is Yordan, and in this video I would like to emphasize on the educational part of how exactly to deal with correlated pairs and correlated instruments in general, rather than the actual setups in this video that I'm going to show. Basically, when it comes to correlation, people, usually novice traders, the newbies, they do the same mistake. They see a few identical or almost identical setups on different pairs which are strongly correlated, regardless whether this is positive or negative correlation, and they just try to jump on every single setup without realizing they're actually overexposing themselves to the same basic idea. And to better explain what I mean, I'm going to show an example, and at the end I'm also going to explain how I deal with those situations, and basically you can take the ideas and apply them yourself. Let's take for example the Kiwi cat and the Kiwi dollar. Both pairs are pretty much showing us the same thing on weekly and daily charts. Weekly chart, we had a strong push down. Now we do have bearish hidden divergence, implying that we should be going lower. Going down to daily chart, we do have this beautiful 5-leg structure with divergence, confirming the idea of the weekly chart, and that means we should be going lower. Going back to Kiwi dollar here, weekly chart, same story. Hidden divergence, daily chart, beautiful 5-leg structure or a special cycle. The divergence is here, and we can be expecting continuation lower. So on at first look, they do look absolutely the same, right? However, when we start digging deeper down to the 4-hour chart or maybe even to the 1-hour chart, we can see some key differences. First of all, Kiwi dollar did form a 5-leg structure here, which means basically we have better chance of continuation because this is a reversal pattern. And again, I'm not going to dig deeper into the actual patterns here, but we're talking about correlation. So that's the first plus and the first red point for Kiwi dollar compared to Kiwi cat. When we go to the 1-hour chart to Kiwi cat, that same setup only has double wave, not triple wave down, right? So this is a minus here. And what else can we say is that this breakout of the trend line gives us one extra confirmation, etc., etc. And basically we start creating a list and we start comparing the list between the two setups, and we see that one of the setups starts to look much better. Another comparison we can do here is the daily chart. Okay, you can see that on daily or weekly chart, Kiwi cat actually broke the previous swing high here. Okay, and when you go to Kiwi dollar, that did not happen. This is the swing I'm referring to on weekly chart, right here. And boom, you have another confirmation that Kiwi dollar might be the better option for you, which brings me to the final part of this very short, but I hope educational video and helpful video for you. How do we deal with these situations? Well, first of all, we can either take only one of the two setups. For example, in that case, let's say we have these two that we're following, and we like better Kiwi dollar as we start looking deeper into the setups, okay, and we simply discard Kiwi cat from the equation. And the story, we use regular risk as we would do normally with any other trade. However, let's say we have 3 or 4 pairs strongly correlated showing us the same thing. What do we do then? In that case, let's say we create a list for all 4 of them, and we do like a lot the first 2. Okay, so what I'll do in general is I'm going to split the risk. Let's say I'm trading with 1% per trade. In that case, what I'm going to do is I'm going to put 0.5 and 0.5 on these two setups, giving me a total exposure of 1% overall, because they're very strongly correlated and chances are if one wins, the other one wins as well. Okay, so that's basically how I deal with those situations. Two methods. I would love to hear your opinion, guys. How do you deal with these kind of situations? What exactly do you do? What do you think about my methods? And let's try to create some kind of discussion here, and maybe we get new ideas. Thank you for watching. Thumbs up if you like this video. Don't forget to subscribe if this is the first time you're visiting, and wishing you a wonderful Monday. Have a good one.